What up, HyperChange? Welcome to another episode of G to a Milli, the show where I open source building my stock portfolio, scheming on investing, telling you what companies I own. Let's dive into the stats, and then we're going to go through each company and my thoughts on what I'm holding. I'm pretty pumped right now, but G to a Milli has had a great year. I started on January 1st last year, so this is as of January 2nd, 2025, 366 days into the challenge. G to a Milli is up 64%. My portfolio is now worth $38,673. I have invested throughout the life of the portfolio $23,520, so up 64% on that to 38 Gs, 39 Gs. The same money invested in the S&P 500 would be worth $26,000, or up about 11%. So I'm feeling good, crushing the S&P for now, just for now. And remember, the whole point of this experiment is to show you just how powerful compounding is, rolling your investing snowball. And the S&P 500 is going to be your best way to do it. I'm lucky right now, but who knows? I might get crushed next year, so you never know. But anyway, these are just the stats going through it for you all. This is my returns. As you can see, I was losing at the start of the year. This is days. This is percent returns. I was getting cocky. I was up 80-something% when Tesla was booming. Now Tesla's down. So now I'm down here to 64%. S&P, that's slow and steady, though. Still volatile with the market. This is a look at what I'm holding right now. 64% in Tesla, 26% Airbnb, 10% Coinbase. The portfolio has not really changed that much since my last update video. I've been nibbling on Tesla and Airbnb. That's about it. Here's some more details of the portfolio. Up big on Tesla, about 100%. Airbnb is about flat, and I'm up big on Coinbase. So, and I also have these charts which talk about the potential of each company. But first, I want to do a little more to show you the portfolio. Here it is in public. Shout out to Public. They're my broker. I love using them. Here are the stocks I own, so you can verify everything is what I say it is. Up 100% on Tesla, 1.5% on Airbnb, 78% on Coinbase here. Then if you go to my history, I can show you what I've been up to since our last G2 Milli episode, which is a few months ago. Remember, I had my whole debacle flipping Airbnb calls. So glad I'm not dealing with options anymore. But basically bought a little more Airbnb stock, and then have basically just been buying Tesla stock with my $250 biweekly deposits. I haven't really been adding much money to the account at all other than that. Just trickling in some guap into my account. Bought some more Tesla at $421 per share. Bought some at $406 per share. So I've just been nibbling, trying to buy on down days, but just building my position and stacking more shares. Let's talk about markets and just what's been going on with the stock market since the election and the new year. Markets have been ripping. I'm calling it the Trump bump, massive Trump bump with assets that people think might benefit from his political regime. You're looking at him appointing David Sachs from the All In podcast as the crypto czar. So of course, crypto has been running and been very strong heading into the Trump administration. A lot of rumors floating about a potential strategic reserve from states or from the U.S. federal government actually buying Bitcoin. So crypto seems like it's bullish more than ever. That whole ecosystem's been doing well. Tesla, Elon Musk, obviously changing his support from Democrats to Republicans. And now that Trump has won, seeming like there's a huge shift in the tone and sentiment around Tesla stock. Could they stop being inhibited by these regulations and actually have an administration that helps them ahead of their launch of their robotaxi? That has been huge. So you're seeing the market make these big shifts in calculations now that the new election has happened, and say, how is this going to play out in the next 4 years? Which assets are benefiting? That's sort of this massive shift that has been playing out through financial markets. So Tesla stock is obviously the one that has been booming the most, and I've been holding on to my Tesla stock. I keep telling people for dear life, because it has been an insane ride here. So as you can see in the past year, this is before the election. Then right after the election, we've had this massive almost 100% run from the 200s up to almost 500 per share. It hit 480 per share. Now we're back down to 380 per share. So tons of volatility with Tesla. I think volatility, for Tesla is just a volatile stock in general, but that's just how the stock market works. Things go up a ton really, really fast. They could easily shoot back down a little bit in times of high volatility. You could just kind of got to roll with the punches. There's not obviously a perfect explanation of why stocks go up and down every day. I know that Tesla just put out its delivery numbers, which I put out a video about. You can check that out. Best record deliveries ever. and record energy deployments ever, but yet the stock was down 6% today, $25 a share down today, despite reporting record numbers. That's because, of course, though, everything had been priced in with this massive run. So when things run up, the market gets disappointed easily. So and vice versa, when they're way low, the market gets excited easily. So that's what we're looking at with Tesla. I mean, for Tesla, and this is what kind of an exercise that I try to do for all my companies in my portfolio here, but of what is my sort of 5-year vision of Tesla? At 379 per share, I assume 3.5 billion shares outstanding, including Elon's comp package. That's about $1.3 trillion of market cap already. So this is what's so interesting about Tesla is despite them being one of the largest companies in the stock market, they also have one of the largest potentials for growth. They're one of the largest companies in my portfolio, but they also have the largest potential for growth. Oh no, did my camera die? Oh, you're going to have to look at me like this for the rest of the episode. This is bad. My good camera is dead. This is back to Tesla. 2024 revenue at $100 billion. Earnings at about $8 billion. These are my estimates. So you're looking at 13 times price sales, 163 times price earnings. So Tesla, by all traditional metrics, looks very expensive right now. But that's because I'm personally, or I think the market personally, is also just assuming this massive change in what Tesla becomes as they go to the more this service-oriented business and actually start selling robotaxi rides and Optimus. Their profitability is going to change dramatically and their earnings are going to boom. And so as you can see, I have their earnings in 5 years potentially hitting $250 billion on $1 trillion in revenue with a $7 trillion market cap. That's kind of a bullish scenario where full self-driving really takes off. And then you can see that Tesla's share price could hit $2,000 per share in 2030. This is my rough estimate. With $1 trillion in revenue, $250 billion in earnings, you get a 7x price sales on that, 28x price earnings. We're looking at a $2,000 stock with a $7 trillion market cap in 2030, compounding today from 379 per share. That would be 39% compounded annual revenue growth for Tesla, or compounding annual share price growth for Tesla. So I think I can make 39% a year compounded on Tesla for the next 5 years. That is insanely good and exciting. So this is why I've been saying I've been getting more bullish on Tesla than ever, because once you can start to see the path of, okay, wait, now they're actually going to be able to do robotaxi. Now Optimus is going to be a thing. The government's going to stop throwing everything at Elon Musk to try and stop whatever they do and whatever Tesla's scheming on next. Now, all of a sudden, it actually looks possible that the Cybercab will launch, and just a matter of when. And so I think that's why the market is getting so excited. But I'm personally holding on to my Tesla stock for dear life. I've never been more excited about the future of the company. Only downside I see is something bad happens to Elon Musk, which would be horrible. But that is like the only way I see Tesla not becoming the world's largest company at this point. Airbnb. So my other holding on Airbnb, and those of you know I'm very bullish on Airbnb. Brian Chesky, owner, operator, founder. I've been nomading, living in Airbnbs, loving the service. I've been a customer on Airbnb for like 10 or 11 years now. I have like 30-something reviews. I love this company. And I think it's just right now it's a cash cow. They're buying back stock hand over fist. You can even see I am pricing in a bit of a share buyback here. $83 billion market cap at 131 per share. Going to do about $11 billion in revenue this year, $2.4 billion in earnings. So you're looking at about 10 times price sales, 35x earnings. All those earnings are straight cash flow. Those are going right into buying back stock. So right now you have Airbnb with this cash cow business of long-term stays or short-term stays. What could they get into next? Maybe long-term stays. But Brian Chesky says they're about to go beyond accommodations, expand beyond accommodation. I don't know. I just can't get over this fact that Brian Chesky still keeps saying that short-term stays are just Airbnb's first thing. They're Amazon's books. They're going to expand beyond accommodations. Who knows what that could look like? Who knows what that could be? But massive growth trajectory. So if Airbnb expands beyond growth or beyond short-term accommodations, starts to really get into growth mode, I'm projecting $500 a share, 600 million shares down from 636 million. $300 billion market cap with $30 billion in earnings, keeping that about 10 times price sales ratio, 25x P ratio with $12 billion in earnings. So I see Airbnb with huge potential, but this to me is a lot less certain than Tesla's, because with Airbnb, it's like, I don't really know how they're going to get there. Is it short-term rentals are going to keep growing? Long-term rentals are going to boom as well. What is this new business they launch? We don't even know what it is. With Tesla, we know it's Cybercat. We know it's Optimus. Then you have the question of how much is Airbnb going to spend on that new business to launch? So that's where I'm a little bit skeptical, because Airbnb on their last earnings call kind of guided that they would ramp up spending heading into this new initiative. And so I'm a little bit concerned about, okay, wait, I thought we had this cash cow business before we, like, can we do something that doesn't require spending all our cash? That's a growth avenue. Why do we have to invest all this money? We don't even know what it's for. So I think there's a bit of uncertainty hanging over Airbnb right now that could get lifted and the stock could boom. But anyway, I'm getting more and more bullish on Tesla. And what I think is so interesting is 31% share price expected growth in Airbnb versus Tesla's 39% in my 5-year scenario. So Tesla, even though it's way bigger, is actually having higher potential upside based on my, and I didn't expect this, but when I was looking at the numbers, that's why I'm glad I did this exercise. And I think it's the high level reason I want to do this exercise too, is it's so important to do your back of the napkin math. Know what your company's worth, know what you think it's going to be in 5 years, know how much revenue they're going to do, what kind of earnings they're going to do, what products are leading to that, and then back into a valuation. That's so important to have your grasp on what is going on with these companies. So as you can see here, that's what I'm trying to do. And in this back of the napkin math exercise I did, I found out that Tesla actually looks like a way better investment than Airbnb in terms of upside. Who knows? But I'm holding on to both. I mean, these are all really good numbers. 31% CAGR would be really good. Coinbase also got 31% CAGR, less than Tesla. And when I looked at Coinbase, I basically thought, this is interesting. $71 billion market cap, 13x price sales, 47x price earnings ratio right now. What would it take for them to be, a 5x on their stock? They would need to be doing $25 billion in revenue, $10 billion or so in earnings. So I don't know. I looked at this and I was like, damn, Coinbase is actually gonna have to grow a lot. They're not that cheap. And I've been up on Coinbase stock a lot, and I don't know, for context, in my other portfolios, like for my crypto exposure, I just own a ton of Bitcoin itself. That's like the only crypto I own is just Bitcoin. So Coinbase is my way to play it at my public account. I think Brian Armstrong, great CEO, owner, operator, founder. But when I crunched these numbers here, I was like, honestly, Tesla, I just like so much more and I understand so much more and I see more upside and such a strong path to that upside that I don't know. So I guess that's where I'm at right now with the portfolio. Like I'm trying to think, I love this trifecta of companies I have. Brian Armstrong, Brian Chesky, Elon Musk, 3 owner-operator founders, incredible entrepreneurs, incredible thought leaders who I respect. But when it gets down to products and investing in the future I believe in, Tesla is just a ridiculous case study. Nothing comes close to Tesla in terms of excitement, impact to the planet, controversy, growth potential to change our lives as we know it. Like it all boils down to Tesla, like Optimus, Robovan, Cybercab. Like it's hard to put into words just how much of a goat Elon Musk is compared to other companies. So Airbnb and Coinbase are exciting, but what are they doing that's as exciting as Cybercab or Optimus? I don't know. Even as I'm talking right now, I'm convincing myself, why don't I just put everything in Tesla? So who knows? That might be the next update, but I like my little diversified approach for now. I mean, all my companies are profitable, have tons of cash, are rock solid balance sheets. They're all in strong positions. I think the economy is going to boom in the next few years. There might be a short hit if U.S. government spending gets reined back, but that'll be good in the long term. So overall, right now with G2 Amili heading into 2025, more bullish than ever, buying and holding great companies. Tesla, I sound like a broken record, but it is the it company of the year, decade, moment, decades. It's Tesla. They have the growth, they have the product pipeline, they have the technology. They're literally manifesting this AI robots future that I don't even think would happen if it weren't for them. So that's I mean, on a side note, also Waymo's been crushing it. I've been very impressed with Waymo. They're at about $100 million revenue run rate per my calculations right now. I think Tesla could get there really quickly with their Cybercab. But then the question is, how profitable is Cybercab? How much investing does it take? Is it all profits, or does it take a big investment phase to get this network off the ground? I think that could be where Tesla share price gets into trouble for a short period of time, is at the deployment stage of robotaxi when the cash flow gets hit in the short term. But anyway, would love to know what y'all think in the comments below. What are your take on markets, on Tesla, on Airbnb, and Coinbase? Where is your head at? What do you think of my 5-year projections here? And what stocks are you buying and holding heading into the next year? Oh, also, I will say on my thoughts on Nvidia and Palantir, because I do get asked about this a lot. I think Nvidia, incredible company. They're running the AI chips that power everything. But look, here's the problem. Are we assuming that the AI models of the future require as much computation as the AI models of the past in terms of chips? Or is there a new way to build AI models where you don't need as much chips and you don't have to buy less Nvidia chips, or you buy a new type of chip, or I don't know. I'm just not an expert enough to know that, and that's why I've stayed away from Nvidia stock at my own detriment because it's crushed it, but I just don't understand it well enough. And although I'm bullish on AI, I'm not bullish that they're going to make as much money on AI proportionally as they have been already. So, and then with Palantir is a great stock, but an amazing company, an amazing business model, very high cash flow, very high growth potential, but you're paying an insane price sales multiple. The growth isn't that good in terms of a percentage basis. I love the founder of those two companies, Jensen Huang and Alex Karp. So those are like my two favorite big cap companies, I guess you could say. But I don't own them, and I think they're too expensive, but I think they're great businesses. They're expensive for a reason. But I also keep coming back to the fact that when I get asked about why don't you own those companies, don't you see the potential? Yes. And I'm big fans of them. And I think, who knows? Best of luck to shareholders. They're crushing it. But I stay in my lane. And honestly, I've never bought Palantir software. I've never bought an Nvidia chip, and I probably never will. I use Coinbase as a customer. I love Airbnb and use them as a customer. I'm a Tesla customer. So be the customer is my investing rule. And that's just what I've been following. So holding on to Tesla stock for dear life, pumped up on the future. Let me know what y'all think in the comments. See you below. G to a milli. We crushing it. For now, at least. But anyway, see y'all next time. Peace.